Today we're going to be analyzing the most volatile market in the recent 14 days, which is the British pound against the New Zealand dollar. This market has had an average 158.9 pips movement in the recent 14 days, meaning this market in the recent 14 days has been one of the most running markets in the entire market in the Forex space. So let's analyze it all the way from the higher time frame to the lower time frame and see if we do have trading opportunities in such a market where the market is running fast. So we're going to start all the way from the monthly. I know a lot of people are scared when they hear the monthly chart, but let's go up there and see what it really looks like. You could forget your fear for a while and stay with me. Let's see how it goes. Now, the last break of structure we had on this market is a break of structure to the upside. As you can see, we have a demand zone down here that has not been mitigated, and price could keep running up forever. You could see, as you can see, price really ran up so strong. It has now created a supply zone, but that supply zone, it seems like it's failing to hold on the monthly time frame. And if a supply zone like that is failing to hold, well, it only means one thing. We're most likely going to see more upside in the forthcoming months. Now, taking that into the weekly, what we have here is we can see price created a leftover supply zone right here. And this week, price has finally moved strongly into. You can see the recent 4 weeks. These candles are huge, my dear. They're huge. Two candles, two heavy candles. 1 week of 2 weeks of major movement. There was a move to the upside, downside, and then you see right here, it moved up, moved down. The next week there was a major move up. The last 2 weeks there was a bit of consolidation, and now we've had that major pump again to the upside. So what are we looking at here? We're looking at a market that is now into a weekly supply zone. However, this is an uptrending market, right? It's an uptrending market, meaning the major breaks we've been seeing are breaks to the upside, breaks to the upside. As you can see, it's breaking to another, it's already breaking up to the upside again, meaning we are most likely going to be leaving behind a zone down here if care isn't taken, like if this price continues to pull up for the next 1 week. But is there still a chance for us to trade this market? Is there really a chance for us to trade this market? Now we head down to the daily time frame. Now this is where I got to cut the video a little bit, because this is where I need to show you guys what is really happening in this market on the back end, on the real back end. I mean, in reality, what is happening in this particular market? We can't just trade the market and say we don't care about what's happening in real life, right? So we need to really pay attention to what's happening in the real life, and we'll go down to the fundamental analysis dashboard for this. Now, to easily locate this market, we're looking straight for the British pound against the New Zealand dollar right here. So this is the track record, basically tracking the scores the dashboard has every week, every day actually, tracking it against what market actually closed at every day. And then now we can check also for that specific pair, the British pound against the New Zealand dollar. So specifically just this pair, I can see that we are kind of neutral. We haven't even gotten any change today. It's still neutral. The variance is absolutely high. It's high. Why? Because we have economic data saying that the opposite of the entire situation is what is supposed to be happening. I mean, this market is supposed to be bearish according to economic data. And in the recent 14 days, the economic data releases is leaning heavily bearish even more. But yet we have a highly uprun or uptrending market. That is what we're having right here, with price being 100% away from the moving 20 SMA, right? We have positive yield, we have positive leverage. The leverage fund traders are trying to buy into this market heavily. They're heavily buying into the pound than they are dealing with the New Zealand dollar. And the central bank rate is the same thing, right? The central bank rate leans more for the pound than it is for the New Zealand dollar. So all in all, what I would say is economically, this market is not supposed to be uptrending via economic standards. However, this is what we also need to understand. Economy is not the only thing that determines price movements. Another thing that determines price movement is where is the money actually flowing to in the market. And from what we see here, there is more money flowing in the British pound than it is in the New Zealand dollar economy. This is what the price chart is literally saying to us. it's screaming at us that this market has everything it takes to remain bullish for a while. But however, just like we checked up before, we may meet hiccups right in these zones of the weekly time frame. Now, do we expect hiccup? Yes. But do we think it's going to suddenly capitulate this market to the downside? I don't think so. I think it's going to push this market a little bit into the available zones we see right here, and then we'll continue this crazy push to the upside. However, let's see if we have clear opportunities. Now, you've seen me teach you guys Quasimodo and Chuch, and what I have here is a very clear distinction. I have this one right here. This is where I have a good QM arrow, and I have this is a daily QM arrow for me. And the only thing that's going to make this very valid to me is when I go up to the weekly, I have a very strong supporting weekly zone directly underneath it. I have a break of structure to the upside with it. So what do I mean? This is where I expect price. If price should actually come in here, I expect a strong reversal to the upside. Maybe not all the way back up, not all the way to the moon, but I expect a strong reversal when price comes into this zone later in time. That is one of my ways of looking at the market. But another thing I also need to look at the market is you can see that there was a major consolidation before this run to the upside. And this gives us a very good daily demand zone right here. Now, this doesn't mean it's not conflicting as much as people think. There's no conflict here. And why do I say there's actually no conflict here? Well, it's kind of very simple. So if price comes in here and decides to bounce off it, it will bounce out of it for a while. But I am much more certain. Now, it doesn't mean this is not valid, but I am much more certain of this second zone than I am certain of this one up here. That's what I mean. But that is not just how I trade. Let's head into the 4 hours and see if we're looking at the market where things may or may not happen. So what I see in this market right here is, as you can see, on the 4 hours, I can see that the zone that was managed to get created, the demand zones that were created here, is real good. We have some really good 4-hour demand zone inside this place here, but they are so close to the long-term break of structure up here. This is the break of structure right here. So they are so close to this break of structure that I would say I sincerely doubt if price comes down here, price is going to push up too hard. It can happen. Again, it doesn't mean it would not happen. It can happen, but I sincerely doubt it's going to do that. So this is my own expectation as of now. I have a zone where my eyes are fully locked in on, and I'm like zoned in already. At the daily, I found what I am looking for. But if I want to even dial down a little bit further, the only place I can dial down to is down to the 1 hour, simply because I already have this demand zone here. So in the 1 hour, what do I want to see? I want to see the exact same situation as what I have here. There are two things I want to see. I either want to see this situation, or I want to see at least this situation with a leftover zone at the bottom, which is what I'm having here. As you can see, we have price moving, right? We have price moving to the upside. You can see I have this low, I have this low right here. So this is the lowest point before this. So I have this low to this high, to this low, all the way up here. So I have this, but I don't have this in this entire price movement. The only place I almost had it was here. I almost had it here. So you can see, I could say this was where I almost had it, but it's not clear enough to be called a zone for me. It's not clear enough. So what do I say? I have move up, move down, sweeping the liquidity, but the move up does not have any leftover show that this liquidity is going to be very valid for me. The only place I have that situation is down here. As you can see, I have that move up, I have that move down, leaving this good liquidity for me, and price continues is move to the upside. So for me personally, I'd say this is a zone I really want to watch out for. Not this one, but this one. This one is where I want to watch out for. This is the one I want to watch out for. When price comes down into the zone, I would look into the lower time frame and hope to see that strength move to the upside. And then I'll take a trade hoping for 1 to 2, 1 to 3 risk to reward ratio and small profits in the pocket. But for now, this market is a market that I cannot even come into because it's not giving me, again, it's not giving me signs of reasons to come into the market. The zones is leaving behind so many zones. As you can see, I'm going to put them as weak zones. This is a weak one. It's leaving behind so many weak zones. So many that it's not giving us clear move. However, everything from this point onwards is now efficient pricing because it has utilized every zone it has created. So everything here is efficient price. This is efficient zones. And what do I mean by efficient zone? So what I mean by efficient zone is on this 1 hour right now, I'm looking at this break of structure up here, right? I'm looking at this move price made. See this move price made? I'm looking at this move right here. If price should find its way below this zone, right? It finds its way below this level. So it means if price should do this for a start, there is a high tendency this is just going to continue until it comes here. That is for a start. There's a high tendency this is what we're going to see. But I don't trade the lower time frames. I don't see it as a time frame that I want to come put myself into. You can see on the 15 minutes, that is an evident low and price has mitigated the demand zone. So if price doesn't go above this supply zone here and it starts to weaken till it goes underneath this, then we're in an efficient zone, and an efficient zone, the only thing I expect is more flow to the downside on this place all the way till it comes down towards these levels. So this is it for the most volatile assets in the market right now, the British pound against the New Zealand dollar. Do well to tune in if you want to see deep analysis into specific currency. You can drop your currency you want me to look into on the comment section below. I'm definitely available for that, and I'll make a very deep, in-depth video just like this one for a specific currency for you. See you all in the next one. Peace.